So, good morning, everyone. Welcome to today's session of Pre-Bell with William O'Neill India. So, before we go ahead, I would like to give a small disclaimer that any security, any stock that we might discuss in today's session should not be considered as a buy or sell recommendation at the moment, and we're just doing it for education purpose. So, without taking up much time, I'll start with Nifty 50 chart analysis for the day. If you look at it, Nifty has been pretty range bound the last few sessions. If we talk about the last couple of weeks, I mean, on the lower end, if we talk about the 18,100 levels, and on the upside, if you look at the 18,350, 18,400 levels. And similarly, yesterday also we saw a very low volume rally, and till the point in time, like if we go above this range of 18,350, 18,400, Nifty is likely to shows this range bound movement only. And even if you look at the broader markets has been the broader market movements is also not very promising at the moment. And if you look at it from the O'Neill perspective, the D-Day count still stands at 1 for Nifty, which is really good, and for Sensex it's 2. So overall, if you look at it, we are still in a confirmed uptrend and still trading above the 50 DMA, the 200 DMA, and the 21 DMA. So which is a really good sign. And uh, so these low volumes will likely be persistent in. I mean, it's not a normally. It's the calendar normally usually happens in the month of November and December as major foreign institutional investors, like on account of their calendar year ending, are mostly not present in the market in the month of November and December. And usually can see some activities picking up from next year onwards. So going forward as well, like till the point in time the D-Day count continues to remain low, we'll be in confirmed uptrend. And if in the following sessions, if we are able to probably uh, on the upside able to go above these levels of 18,400, can see some kind of rally going forward, like from here. Or if we probably breach these levels, then we can probably find supports at the 21 DMA, and God forbid if we probably if those gets breached, then even the 50 DMA can act as a support. Talking about key news, like the Siemens result was left, like the season has been over, but Siemens came up with its result, and the result was a miss on the estimate on all the fronts. PAT grew by 20.7% YOY to 381 crores, revenue grew by 11.6% YOY to 4,657 crores, margins expanded by 60 bips YOY to 11.1%. Australian Parliament approved a free trade agreement with India. Talking about Australia, its neighbor, even New Zealand, the New Zealand Central Bank came in with a 75 bips rate hike, the largest in their history. And BCW to double its CPVC capacity by adding another 10,000 of capacity. Another major news: Nykaa CFO Arvind Agarwal resigned. Wipro launched a cybersecurity consulting offering in Europe, and Adani Enterprise to consider raising capital on Friday, that is November 25, by public offering, even preferential allotment, including QIP or a combination of both methods. SR Power to pay LIC rupees 680 crores to settle outstanding NCD dues. Talking about your FI and DI flows, FI sold equities worth rupees 698 crores, and DI bought equities worth rupees 636 crores yesterday. Talking about global markets, your again you saw like low volume rallies in the US markets, that is Dow, S&P 500 and Nasdaq were up by 1.2 to 1.4%. And similarly, on the Asian front, the you're looking at the action. The action is kind of muted, with Shanghai at minus 0.1, Kospi 0.4, and Nikkei is likely to remain closed as on account of a Japanese holiday. Talking about the USD INR, USD INR is trading at around 81.76 and Brent crude at 88.3. Talking about the SGX Nifty, SGX Nifty was trading around 18,347, around 80 points higher from yesterday's close. So we can see some kind of positive traction in today's session. But like the cap of 18,350, 18,400 needs to be breached in order to see a good rally going forward. So we'll talk about the sectors, and if you look at it, like sectors and the broader market, I mean the broader market is still under some kind of pressure. As you can see, the broader market, the mid cap and small cap is still below the 50 DMA, which is not a good sign. Even certain sectors in the last few sessions have come under pressure. If you can see, the realty has gone below the 50 DMA. FMCG has gone below 50 DMA, energy as well as auto. And if you look at on the other end, like not the other end, from the 200 DMA perspective, IT is still the laggard. Like, I mean, it's still like nearly 2.2, 2.3% below the 200 DMA. I mean, financials are doing really, really well in terms of PSU Bank, your overall banking sector as well. I mean, those are the ones that have been the outperformer. If you look at from the bank's perspective, I mean, they've been doing really well. I mean, similarly, I mean, banks, financial services, and those are the ones that they're the one doing really well. Even metals, I mean, there was this, I mean, your steel export duty, I mean, got waived off. So, I mean, there was this some kind of just a sentimental boost. If we talk about from the disparity between your domestic prices and the export prices, they still remain. So it was more of a sentimental boost for the metal sector. So, I mean, our chart of the day is West Coast paper. And before we go ahead, I would like to give a small disclaimer that this. I mean, we discussing this just for educational purpose, and it's not a buy or sell recommendation at the moment. I mean, the stock is there in our buy watch list, and if it breaks out, then probably it will become an ideal model portfolio candidate. So, going to like to discuss it from the company perspective first. Uh, Overall, I mean, if you talk about first the paper sector as well, the paper sector has been doing really well, and we had come up with our thematic report on the same as well. I mean, talking about the different demand drivers and how, the players such as West Coast Paper, who are probably backward integrated, uh, are well suited for this system in terms of how their margins have been expanding and how the demand drivers have been persisting in terms of unlock trade, in terms of school reopening, office reopening, and all of that have been working well for the company. And in terms of even talking about capacity utilization, the capacity utilization is at around 93% for the company. And overall, the company is, the Vesco brand in terms of paper and paper boards is doing well, along with range of office stationery, premium printing products, and other value-added products as well. The company has a cable division as well, which is very small, around 4% of the revenue. And in the cable division, it caters to micro cables, ribbons, and FTTH cables, etc. I mean, they've been executing orders in India, and in the Europe as well. So now coming to the bond perspective, and if you look at it, I mean, the good fundamentals have been reflecting in the last 6 to 7 quarters of earning as well. Similarly, you can see institutional support coming in for the company as well. ROE is really stable at 15%, and similarly, ratings have been good. Overall, good master score, EPS rating of 77. Price strength is very good at 90, and even the RS line has started to inch higher now, which is a good sign. Buyer demand is also good. And if you look at it from the last couple of breakout perspective, I mean, you could see good traction going in. I mean, if you look at the first base, if I am talking about, it did fell on very low volume, which was a really good sign. And you could see good accumulation just before the breakout. So that is what probably led to the rally, and that was really good. And similar action was seen in the double bottom base as well. I mean, the fall was on lower volumes if you look at it. And again, just before the breakout and post the breakout as well, you could see good accumulation. And similarly, you could see this rally as well. And if you look at this fall as well, I mean, the fall has been very similar. If you look at it, no big red bars. It's all the the fall has been on lower volumes. And similarly, in the last few days, if you look at it, you can see volumes coming in just for the last session as well. And again, if you look at it, if the stock breaks out, I mean, on above average volumes, I mean, you need a good volume bar here again. If it breaks out on above average volume, the stock is just 2% to pivot at the moment. So if market inches higher, the stock inches higher on above average volume, can be an ideal candidate for a good breakout in terms of both from a technical and a fundamental perspective as well. So thank you, and that's it from our side. And stay tuned to the space of Prebell with William O'Neill India at 8:45 a.m. sharp, and after hours at 4:30 p.m. sharp from Monday to Friday.